Welcome to this Killick Explains video, and this time I want to take on a big hidden elephant in the room for stock market investors, and that is private equity. What is it? What are some of the key features? And is it a good thing or a bad thing? Because it's definitely a big thing. So, going back to basics first of all, you are a company looking to expand. What are the options in terms of the way you do it? Well, you've got organic growth, you've got your own funds, you've got growing using past profits and past cash flows. Then you've got approaching a bank for a loan, let's say. So you can go to a lender, maybe offer some security, which will influence the rate on offer, and build your business that way. So far, well away from any sort of public spotlight, if you like. But then you've got going to public markets. You've got IPOing, listing your shares on a big exchange or maybe multiple exchanges, London Stock Exchange, New York, or one of the European exchanges, for example. You've got raising money that way from the public. And then you've got this sort of hidden source of capital known as private equity. Now, what is private equity? It's kind of hidden. It's off-piste. It's stuff you don't hear about as often as you hear about public listed companies. So what is it? Well, essentially, private equity is usually a private equity house, and these are often specialists, quite often based in places like San Francisco, for example. They can be based all over the world. They can be bolted on to much bigger organizations, or they can act independently. They're called PE houses and they act independently. And normally what they're doing is they're marshalling capital from various sources for investment into companies. And those sources can include big pension funds, life assurance companies, sovereign wealth funds, high net worth individuals, and so on. You get the idea. So they're marshalling capital that's looking to make a return, and they're channeling it into companies that they think have got the potential to offer that return. Now, what are their aims? Well, essentially, backed with all this capital, and there is a lot of capital washing around at the moment, looking for a home with interest rates low, as I make this video towards the end of 2021, what are they aiming to do? They're aiming to pick off companies. Now, that could be a company that's already private. It could be a company that's already listed. They're looking to pick up companies and turn them around. They're looking to make a turnaround play, basically, usually with a view to getting out again within about a 5-year time horizon. How are they going to get out? They're going to buy the company, they're going to restructure it, and they're going to then look to either make a trade sale onto perhaps another PE house, or they might look to bring it into public markets and IPO it, initial public offer it. But they're looking to offload, essentially, and of course make a profit or return in the process, both for the PE house and of course for any investors providing the risk capital. Now, how do you do that? How do you take a company and make it better in 5 years? Well, some of these PE houses keep their secrets to themselves, if you like. Some of them have specialisms, some are more tech focused than others, for example. Some are more product innovation focused, but essentially, what are the options when it comes to improving a company to either sell it for more than you bought it for, or to put it onto the public market and make your return that way? Well, there's improved management. PE houses will claim to attract some of the best ex-CEOs, some of the best market professionals, some of the best ex-bankers and so on, coagulate them together into an elite team, bring in experts that can take the key C-suite positions, as it's known, at a company and just run it better. Now, that might involve cost cutting quite aggressively, taking out some of the fat, if you like, making the company leaner. It might include acquisitions, so looking around the world and realizing the company they bought will be bigger and better if they bolt things onto it bit by bit. And it can be through product improvement. So tech transformation, for example, taking a sort of sleepy old product in a tired industry, if you like, and transforming it using technology. They're not maybe going to take it all the way. They want to leave some value on the table for the next buyer or when the thing's IPO'd, but you get the idea. Now, private equity has its critics. Critics say all this is essentially is an aggressive company coming in, slashing costs, firing people, taking away the core of the business, bringing in new sources of finance, refinancing it. It's all lipstick on a pig, basically. But actually, there is a bit more to it than that. There are no free lunches out there, either in the private equity world or in public markets. So actually, less cynical view would say these are firms genuinely trying to improve return on investment. They are bringing in expertise. They're bringing in new and potentially cheaper sources of capital, and unlike public companies, which are forced to report on a sort of quarterly basis in a lot of cases to the market, justify their stance to anxious fund managers and analysts and so on, these are people able to take a slightly longer term view. Now, they're not going to stay invested forever. They are looking to get out at some point, but a longer term horizon, away from the scrutiny of public markets, away from the media frenzy that surrounds public companies, is what it's all about. Now, which side of that argument you buy is entirely up to you, but there's no doubt about it. Whichever side of the fence you sit on, critics or fans, private equity is becoming increasingly difficult to ignore. Now, if you'd like to see videos on some of the terms I've been mentioning as we go along, IPOs, for example, then do feel free to access our comprehensive library, Killik.com/learn. And if you'd like a copy of my guide, all about equity markets, then do please ping an email to editor@Killik.com.